Okay, let's talk about profitability. If you are measuring your success by the size of your invoices, then you might be missing something critical. That's because some clients will go ahead and build your wealth, and then there are others that just go ahead and drain it. And those clients are sometimes your highest paying monthly clients. So consider the fact that you might have a client who's paying you $4,000 a month. It looks good on paper. It is something that you are very proud about. It builds up your top line, but there might be some things that you just aren't tracking. Think about the 15 emails you get every week from that client asking for clarifications, or the fact that there's 3 rounds of revisions on every single deliverable. They want something different, or they forgot to tell you something, or they're not really communicating with you as well as you would like. And then there's those emergency, last-minute, unscheduled calls that throw you off because something happened and now they're in a crisis. And then they have one little request at a time, and the scope has expanded from when you first onboarded and enrolled them. So those are some of the things where $4,000 a month looks great as far as the top line goes, but the bottom line, boy, all those extra hidden hours, they just go ahead and add up. So even though they might be paying that $4,000 a month, they're consuming $6,000 worth of your time and your team's time. So not only are you now subsidizing their work, you're working additional hours, you're exhausted, your team's frustrated. And as a result, it's not as profitable as you thought, if it's even profitable at all. So I want to say, when you have those large clients and you're tracking just the top line, you're not looking at the profit margins, then the math does not work out all times. And I want you to be able to know that this is something that can be easily corrected by just paying attention to that bottom line as well as your top line. So instead of just looking at the top line and the revenue, let's look at client profitability. And I will let you know, with every single firm owner that I do this with, it is an eye-opener. Every single one of them is going to find some money that is left on the table, or some redundancies, or maybe where they are paying for something and they shouldn't be paying for it. So it's a way to be able to correct and increase your profit margins without having to bring in any additional work or clients. So let's talk about the 3-step profitability assessment. Very first thing is you want to be able to actually track the time invested. And even if you don't like tracking hours, we're just going to be able to do this for an eye-opener to give you some awareness about what you think you're doing for them and what's actually going on. So let's take a period of time. I would suggest 1 full month where you are tracking everything, including the work that you're doing without getting any compensation. And that is going to look at the work that is already in your packages that you're doing for them on a monthly basis that needs to be done. And then also now start adding in those emails, those quick clarifications, maybe any meetings or calls that are outside of the agreed upon scope, revisions that might have been slowly added in, but they weren't in the original package, and also any admin tasks that are tied to this client as well. Once you go ahead and track these, then you want to compare the total time invested to the revenue for their package. So think about it. If you have a client and that is paying you maybe $5,000 a month, they're in your silver package, but now they require extras. It might be extra emails going back and forth, some of those revisions that I mentioned, or the last minute requests. So that adds up maybe to an additional $1,500 worth of unbilled effort that you are devoting to them month in, month out. So in reality, yes, they're paying you $5,000 a month, but you're doing an additional $1,500 worth of work each and every month without compensation. It just kind of like creeped up. And as a result of that, that means that this client is only really contributing $3,500 to the net value. Is that really how you want to run your business? And if you had a client doing that, you would probably point it out to them, but sometimes we don't look at that for ourselves as well. It just goes under the radar. So this isn't right or wrong. It's about having awareness and starting to pay attention, not just to the top line, but to the bottom line. And as a result of that, you now, once again, have this awareness. And once you have awareness, then we can go ahead and make adjustments, maybe to the scope, put in some boundaries. Maybe there's some add-ons that you need to be able to talk to them about in order to not only protect your time, but your team's time and the ability to go ahead and grow, scale your firm. So the very first thing you want to do is to be able to start calculating the actual time you're investing into a client. And then the next thing you want to think about is evaluating that client behavior. Now, this is a little bit of a softer evaluation, but think about, how do your clients interact with your firm? And at this point, what you might want to do is give them a letter grade, A, B, C, D, F, just like you got a grade in school. So with these clients now that you're evaluating, do they respect deadlines, or do they sometimes want these frequent last-minute changes, or they just don't even respond to your communications, and as a result, it throws off your workload? So that's what to think about as far as respect goes. And the other thing is, do they actually follow through and care about your advice? Or is it that they question everything as far as services that you do for them and recommendations? So once again, are they a high quality client or are they a low quality client? Those are two things you want to start to assess as far as client behavior goes. And maybe a way to be able to start talking and opening up the conversation with a client about this is suggesting them, we're wrapping up this quarter, and let's review a couple strategies that could actually help your business run more smoothly. Does that interest you? If they say yes, and they actually implement, they are a higher quality client. If they say, no, we really don't want to do those things, that doesn't really matter to us, they aren't really your highest value client then. So once again, how they respond to that request to be able to look at your input and have some strategies for them is going to reveal a lot as to whether they appreciate your input or they really don't value your expertise. So that's number 2, is evaluating client behavior. Now let's go into step number 3, which is calculating the contribution margin. Once again, step 3 is calculating the contribution margin. So this is where you do the math, very easy math. Revenue minus the total cost to serve that client. And once again, include all the things that you're doing, even the things that you're not compensated for or that weren't originally in the package. And what does that add up to? Does it fall within the target rate of what you want? And anyway, the revenue minus the total cost to serve your client is going to be able to give you that contribution margin. Once again, you might find out that there's some clients that you're actually subsidizing their work with you. So they are in the red, not in the black. Or maybe there's a couple clients that have a very low profit margin of 5, 10, 15%. That's not what you want to do to be able to have a business that you can grow and that's sustainable. So once again, if you have numbers that are either negative or just barely positive, something has to change. You have to be able to take care of this and address it. And maybe something to think about is, how would you move forward with this? Well, I want to give you an example. Jennifer, she has a 3-person firm. She brings in about $280,000 a year in revenues. And her largest client was paying her $6,000 a month. And this was 25% of her monthly revenue. It was pretty significant. So she assumed, because this client was paying 25% of her revenues, $6,000 a month, that this client was actually her most profitable client. Once again, we followed the formula that I just gave. She did a client profitability assessment, and it revealed that that particular client consumed 35% of her team's capacity, and there were so many interruptions along the month. As a result of that, it slowed everything down, and workflow never got completed according to the timeline. So as a result of that, think about it. Jennifer, the firm owner, she was working additional hours just to keep up, and her team was frustrated. Because of that, we looked at how to be able to restructure this particular engagement and revise the packages, use value pricing. And some of the things that we looked at is focusing on very specific deliverables as well as timelines. And as a result of this, has created some boundaries and really brought back in that scope. And the other thing is that the things that were out of scope, we went ahead and looked at how to be able to do these things as projects and to be able to value price those projects. So once again, we created a package that was very specific on deliverables as well as timeline. And the other thing that we did also is looked at the additional things. We went ahead and we restructured them as projects, and they were value priced because those were out of scope from the package. When she met with this client, it sounded something like this. We want to continue providing that quality of service that you expect. And we appreciate you as a client. But to do that, we need to review your package as well as your pricing in order to be able to give you predictable costs as well as clear deliverables. We want to have everything be transparent. That way, we can focus on what matters most to your business. So it was something that she felt needed to happen. It took some courage. She didn't fully have the confidence to do that. But because she now had the insights as far as this client not being as profitable as she thought it was, she knew a correction had to happen. So by having that conversation with the client, she went from having this client go from $6,000 a month up to $6,800 a month. And it wasn't just that it increased how much they're paying her, because of the fact that she was able to contain the scope, review some things, focus on what mattered most. She was actually able to reduce the time that the team spent on this client by 40%. So they went up in how much they paid, and they reduced the workload by 40%. That was specifically, that was really insightful for her. And this meant that she got to free up 15 hours a month. And as a result of that, she took that 15 hours a month and focused on high level advisory work. Now, this is something you can do as well. So here's what I want you to think about to start moving in this direction. Pick your most time intensive client. Just let's start with one. Now run that client through this 3-step assessment that I told you about, where you want to become aware of what you're doing and how much time it's actually taking, and then be able to get some insights as to how profitable they are. Think about the client behavior. And also the 3rd step was to be able to calculate those contribution margins. So that is something you want to do, is run them through the 3-step assessment. And if the math does not work, if you're shocked by the fact that you're actually you're not getting compensated for everything you're doing for them, you know that there needs to be adjustment, you are tired of having very, very low margins for everything that is being delivered, then you need to go ahead and schedule a restructuring conversation with that client. It is business. Even if they are the nicest client, this is business in order for you to grow and move forward and have everything be transparent and on the same page. So we want to have it be something where it's coming from a place of wanting to improve the services for them. This is a very client-centered conversation. You want to say something like, we want to make sure that we can continue to give you our best service, and we reviewed the packages of what we're doing for you. It requires a couple adjustments that we want to discuss. Once again, it's not just about the profits. It's about freeing your time in order to better serve your clients and also reclaim your personal time back, so you're not having to work late evenings. So if you are ready to transform your client mix, have a more profitable client caseload that you're working with, be able to get people that you've been subsidizing up into the black and not in the red any longer, and not just that little 5 to 10% margins, but really healthy margins, as well as looking at the value pricing, reducing your workload, then let's talk. Go to businesssuccesssolution.com/let's talk to be able to get the conversation started. And during that conversation, we'll review your portfolio, your client mix. We're going to map out a plan to be able to grow your firm in a very profitable way, and not one that's going to drain your energy and just tire you out and exhaust you. So if you want to be able to grow your clients and your business, you want to be able to find where there's actually money already in your business that you haven't even tapped into, the hidden costs, let's go ahead and come up with that plan. That's because revenue shows what you bill, profitability shows what you keep. That is so important, what you keep. So when you measure what matters, what you keep, you can actually go ahead and make decisions that move your firm forward. Anyway, I would love to hear from you. What is it that you liked? What is that you need additional information about? What is a firm? What action are you going to take in order to be able to raise the bar as far as the quality of clients that you serve and also the quality of service that you delivered? So you have a firm that you run instead of one that runs you. Would love to be able to hear your feedback, your input, what resonated with you. Lauren Fogelman with Business Success Solution, showing firm owners how to be able to double their revenues, working half the time.